watch. Are you setting yourself up for financial ruin? It turns out there may be a few things that you're doing on a regular basis that could mean financial failure down the road. Certified financial planner Bert joins us now to talk a little bit more about it. Good morning, Aaron. Thanks for being here. So let's dive right into it. What are some dead giveaways you're setting yourself up? Let's start with you're reliant on credit cards to maintain your lifestyle.
Well, a lot of this has to do with living beyond your means.
Right.
So if you're constantly putting money on credit cards in order to fund your lifestyle, big problem for financial ruin down the road.
All right, and how you live, literally put a roof over your head if you're spending more than 28% of your gross salary on rent or mortgage.
Right. So again, this is debt to income ratios that we're talking about. So if you're spending more to fund debt than you are that you're bringing in, big problems down the road. So you got to be able to get these things under control now so that 10, 20 years down the road it doesn't blossom into a huge problem.
Yeah, a lot of people call that being house poor.
Yes.
You take out a payday loan or borrow from your retirement funds. That's a big no-no right there.
Big no-no, especially borrowing from your retirement funds, because you're paying not only taxes to borrow from it a lot of times, or you're also going to be paying penalties if you're taking withdrawals. And then there's payday loans, just a bad idea. Those guys are taking 10, 20% right off the top in order to write you that check for that check that you're giving them.
Yeah, dead giveaway that you're also on the road to a bad place financially as you're receiving lots of collections calls.
Collections calls come when you're not paying your bills. You're not paying your bills because you have too much debt. So if you can't be fund your debt or afford your debt, you shouldn't be taking it on in the first place.
And you should always have emergency savings, right? Work hard to have that.
Yep, 3 to 6 months worth of emergency savings. Interesting fact, more than 50% of the people have more debt than they have savings. Bad ratio there. So you want to have more savings than debt, 3 to 6 months of emergency funds, just in case you lose your job or you have a big problem.
And if you start overdrawing your checking account?
Yeah, you start paying fees, and that means that you don't have enough money in the bank to fund your lifestyle. So then you start using your credit card. Exactly. So it kind of snowballs and creates big problems for people.
All right, and if you have a car and you're behind on those car payments?
Again, you have more debt than you can afford. So again, they all build on each other, they all snowball. It's all about living within your means. Don't have more debt than you can afford. Don't spend more money than you're bringing in. You should be adding at least 10% to your savings every month.
And if you have a credit card, you have a credit card limit, and you need to pay attention to it, right?
Yep, because if you hit your credit card limit, that means that you're building on your debt. You're using your cards to fund your lifestyle. They all build on top of each other.
And you have to pay a percentage of that balance too, every month.
And the interest rates are huge.
And a lot of people really, I don't think, pay attention to their credit score, and you should, especially if it's below 600.
Well, your credit score determines what rate you're paying on long-term debt. So when you go to get a car loan or a mortgage, or even if you go to get another credit card, that credit score is determining whether A, you qualify, and B, what kind of rate you're going to get once you do qualify.
And finally, not knowing how much you owe on a credit card. We're out of time, but that's the last tip there. Aaron, great to see you as always.
Thank you.
Thanks a lot. Still to come, it turns